Hi guys. Today we will analyze DKS Sporting Goods stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock had a good overall performance in the market in the past year, but recent evolutions are not positive. Both the medium and short-term picture give negative signs. Support levels are around $104 and $99. The next support levels are around $88 and $80. Resistance levels are around $110 and $119. The next resistance level is around $130. In the last month the stock has been trading between $92.30 and $115 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 10% per year, for last 5 years. We see that the average profit margin of the stock has been around 6% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 129% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for DKS Sporting Goods Company: bad, average, and good. First scenario. DKS will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 0%. Future profit margin would be low, 3%. Future free cash flow to net income rate would be low, 60%. In this case, the fair value of the stock today would be $64. Second scenario. DKS will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2%. Future profit margin would be average, 4%. Future free cash flow to net income rate would be average, 70%. In this case, the fair value of the stock today would be $95. Third scenario. DKS will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 4%. Future profit margin would be high, 5%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $136. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 13.87. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For DKS Sporting Goods, analysts forecast growth rate around 4% per year in next 5 years, and future P/E around 9. Again, I will use 3 different scenarios for DKS Company: bad, average, and good. First scenario. DKS will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 0%. Future P/E would be low, 9. In this case, the fair value of the stock today would be $45. Second scenario. DKS will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2%. Future P/E would be average, 10.5. In this case, The fair value of the stock today would be $63. Third scenario. DKS will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 4%. Future PE would be high, 12. In this case, the fair value of the stock today would be $85. As you can see, today the stock is overvalued, $107, even if we expect the company's high performance in future. The fundamentals are good. But the stock is currently overpriced. Also keep in mind that in the coming 5 years DKS will show a small growth in revenue and DPS, 4 to 6%. I may consider buying the stock when the stock drops to $80 or lower. Company's strengths. DKS Sporting Goods is a full-line sporting goods retailer. The company offers a broad selection of brand name and exclusive brand sporting goods equipment, apparel and footwear. The company operates 730 DKS stores in 131 other locations. DKS sells merchandise from approximately 1,300 vendors. The company won 8.5 million new customers in 2021 and has had success in retaining them. Participation in outdoor activities has increased and consumers have a greater preference for athletic apparel. DKS is using AI and machine learning to improve the routing of packages, to tailor marketing offers based on customer preferences, and to improve merchandise availability. DKS is focused on exclusive and innovative merchandise that improves athletic performance. 2/3 of the company's store leases are up for a renewal over the next 5 years, giving the company the flexibility to renegotiate rental agreements. The company is financially healthy and should not expect problems in meeting its short-term obligations. DKS has a return on assets of 17% and return on equity of 72%. This is amongst the best returns in the industry. Its profit margin of 12% is amongst the best returns of the industry. Risks. While sales did rebound after COVID-19, consumer spending could be crimped by elevated unemployment, the absence of government stimulus, the need to pay off consumer debt incurred during the crisis, and lower confidence in spending rather than saving. Spending on bikes and athletic gear may decline as people return to working in their offices or go back to exercising at schools and health clubs. Retailing is a very economically sensitive business and demand for sporting goods can decline in a weak economy. In addition to being cyclical, the business is also seasonal, with approximately 30% of sales and 40% of EPS coming in the fourth quarter. Warm weather may dampen sales of cold weather merchandise during this important period. Another risk is that cold or rainy weather may dampen sales in the spring. DKS has also been hurt by the declining popularity of golf. The company's sales could suffer if successful brands elect to sell through their own channels rather than through DKS. Merchandise costs could be affected by commodity prices, labor costs and transportation expense. Intense competition. Many of the company's products are also available at Walmart, Target, Amazon, other sporting goods stores. Based on estimates for the next 5 years, DKS will show a small growth in revenue. The revenue will grow only by 4% on average per year. The earnings per share will grow only by 5% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.